Hi, welcome to the Market Alert for Thursday, the 3rd of June 2021. So speculators bet the farm on stocks. This sort of extreme crowding suggests that any equity market weakness that may materialise over the next few months could play a catalyst for a serious bout of deleveraging, i.e. a correction. Well, as long as they keep pumping it into the market and the Fed put remains in place, then it will continue to move higher. Peter Schiff, traders starting to realise high inflation is bullish for gold. The Fed's not going to tighten policy, and so what they mean by that is increase interest rates, and so inflation is going to continue to erode away the value of those dollars. So why would you buy them? Well, apparently you won't. You will sell them and you will buy gold. Well, anybody that is in a position to do so has already been buying gold in anticipation of this. Implied volatility, we had 1492 on Tuesday. Yesterday we've got 12.8, and then the low that we've had on Friday of last week is 12.27. So the implied volatility responding yesterday and moving to the downside as well to support the stock market. Well, just before we look at that, let's just have a look at the news that we've got today. ADP numbers, they're out today. They're a precursor to the non-farm payroll on Friday. Keep an eye on those unemployment claims for the US as well. And then we've got ISM services PMI as well. That looks set to increase as well. No surprise there. And then crude oil inventories have moved to 4 p.m. And then Bailey's out speaking at 5 p.m. Again, I think that's his third time this week already. So let's have a look at the Dow. This is the Dow daily. We can see that yesterday the market was sideways inside the range of the previous day's bar. So Tuesday's bar there, stuck inside the range of it. So if we go from this high to this low, and then from this high to this low, and then project back, see where the market is. So we'll start off with the bigger swing there. You can see the market trading up towards that 89% there on Tuesday, and then the market sideways yesterday. And then from that same high to this low, you can see, let me just redo that one. You'll see that we're in a similar situation for both the 89 and the 78 for this market. So keep an eye on these areas for the Dow as it attempts to move higher. Yesterday you can see that it traded up to the 78% there and then failed to move, so I'll just save these. In the German DAX, we are at an all-time high here. This is a brand new one. This was created on Tuesday. Yesterday inside bar as well for the German DAX. Can't really measure anything here apart from on the downside from here to the all-time high, which will project back. These are your areas of support should there be any sort of movement to the downside. Otherwise, you'll see what you can do here, because you've got nothing to measure to the upside. You could go from here to here, but what I would do is this: if you take the bar here, the all-time high bar, and then just click twice on the bar, what I'm going to do is just to drag this out, and I'm just going to remove most of these, and there you'll see, if you take the range of this bar, and then you'll see the resistance. So I mean, basically what you're looking at is 3/4 of the range to the upside and 89% or 90% of the range of that bar, just to see where there will be some resistance. Quite an effective way of using this actually in a lot of bars. If you go and have a look, you can measure this and you'll see how the market responds to this as well. But because we haven't got a low down here to measure from to project back, then I'm just going to use this range of this bar. It's a very big range bar. I think it was 350 points that can be used to measure back to the upside. So yesterday in the DAX, we kicked off with another move to the upside. This didn't last long, and then prices made their way straight back down to the DP and sat on this. We had the sell signal there, the market trading down. You can see them buying back, and then we have the correction. Again, we see the market test before we move back, and then prices just drifted back once more from here down to here to around 62%. But inside of this, again, you can see a double bottom at this level before prices then moved back. So all the way through the morning session there, the market just drifting in a range and coming back to the DP. We had 3 tests at this sort of level here. Market back, coming back up to the 200 MA, coming back before it moved to the upside. Then in the afternoon session, started off with the market moving lower and then coming back into this area here. I'm just going to grab this. So from here down to here, back to the BRN, you will see there's a 78.89 level. We can see that we've come back here to a double bottom, and then from there back to there again, you can see that 62.78, 62.78, 100% back there, and then the market just trading in a fib retracement range. Overnight prices are off the DP, which we can see there moving to the upside. Bit of a cluster there of volume. Pajama traders out there, and then moving back to the high, having a look at this twice, and then prices drifting back down and sitting at the 200 MA at the moment. So a fairly quiet night session there for the German DAX. I'll just drag this down and have a look, see where we are. Yesterday's high isn't too far away, as is the low, because of that inside bar activity there that you can see for yesterday. Just go back to that 2 minute if I can find it. So yeah, you're only 50 points or 60 points from the low, and the high obviously a bit closer there. So we've got to get through the high if we're to move to the upside. Stay above the DP and the close and the BRN on the downside. If we break this and the DP, then we could move 50 points down to the low. So there's your sort of targets for today with regards to the German DAX. So have a look at the metals. An interesting day yesterday. We'll start off with silver. The market being brought back from that 78% that I drew in yesterday. Found support and moved up, but overnight at the moment they're moving silver back, straight reversal going on at the moment, as you can see, down to yesterday's DP. We'll need to hold at this level, and it's a shame at the moment because they're trading below 28. I was hoping it was going to hold above the 28 and the DP level. It could come back, but at the moment they're finding the opportunity to move the silver market to the downside there. Let me just put that back to the downside there, which is what we can see. Again, what I could do here is let me just grab a retracement tool. I can't really draw anything on the downside here because there's nothing to, as well, because the high of the overnight bar is higher than yesterday. So again, what I would do is use this bar here and just click twice on it. What I mean this bar, I mean yesterday's bar. So if I click twice on that, I can already get an idea of where this is likely to come down and then find support. So again, at the 20 bar moving average would be the area where I would be looking for support if they continue to move the price of silver down as the market unfolds this morning. Now, the reason for this at the moment is the dollar's moving higher. It's trading up to the 20 bar moving average. It did this yesterday and then all of a sudden reverse. So I'm hoping that's going to be the case, that we see the dollar actually reverse and move lower. Now, again, I've said this many times before, we need to take these areas out in order for silver to move or have any chance to get in and staying above the 28.50. The dollar needs to move lower. And we're seeing this in gold, except gold is in a sideways range now and holding very strongly there, considering that the dollar is attempting to move back to the upside there. unlike silver, which is again being hammered, which is no surprise, is it? It's the pattern that we've seen. They don't want silver going up. Simple as that. If they can hold it back, they'll hold it back. And as I said before, I'm surprised that it's not being hammered to the downside, and they've taken advantage of doing that. But so far, it's managing to hold and come back towards that 28 level, which is again, hopefully the market will turn around again today and hold above this level, but we'll see. So that's it for today. That's a quick roundup of everything, and we'll see what happens as it unfolds. Not too much on the news front, so the market's going to have to make its own direction for today. Okay, that's it. As ever, thanks for watching. See you in the next one.